Hey, what's up, everyone? Hope everyone's doing well. Um, Today is the 27th of August, and it's a Tuesday, and we're just gonna take a little review of today's price action in the morning session. So, as I'm internalizing everything that's going on, I'm looking at how we've had a market structure shift at 950, and this was within the macro. We've had a strong rally to the upside, an institutional order entry drill, and the way I'm looking at this is I want to see the gap at the market structure shift there with the red light bulb. I want to see that stay unfilled. So turning to RTH, regular trading hours, we've opened up in a discount. So right away, my eye is jumping to, is this gap going to be refilled? And 70% of the time it is going to get refilled. So my attention is there. And so what I'm doing with the opening range high is each time there's a new higher high within 9:30 to 10, I'm just moving it because I want to get my idea of where this range is from 9:30 to 10. And that's where I can gauge a power of 3 setup and where we're at, if we're looking bullish or bearish. We have a news driver coming in at 10. It's not a big one like CPI or FOMC, but it does give us a little bit of power to push up. One thing I really enjoy with these new day opening gaps levels that I have is you can tell when price is going to be in a consolidation, and that really gives you kind of a inside edge of understanding, okay, I'm in a time where price is going to be distorted and consolidating because it's hitting these levels and they're bunched up together. So it's going to cause price to go back and forth until there's some kind of breakaway gap, fair value gap, some kind of breaker, some kind of run on stops before it moves higher. So right now I'm just taking a look and making it permissible with these two fair value gaps together. It is okay if price colors outside the lines of that first fair value gap. Totally okay. I just want to see that unfilled and the bodies above this fair value gap. It's giving me a signature to look at if I'm on side of the marketplace being bullish. So right now I'm taking quadrants on the fair value gap. And the way I do this is anything below consequent encroachment of that fair value gap, that makes me less likely to be on side with it being bullish. When price is above that, it's kind of giving me its hand on if I'm on side, if I'm looking for longs, and if it's gonna stay in that buy program. So we're just waiting. I'm taking some standard deviations from the fib to take a look at if it looks good to draw towards that buy side liquidity found at yesterday's near closing price. And that's what my eye is always going to be jumping toward, is any kind of relative equal highs, any kind of singular highs, any kind of inefficiencies, because this algorithm will reprice and draw to that to take out stops. So right now, I'm just simply waiting, and in my head, I'm just wanting to see some kind of speed and distance from these levels. Because like I said earlier, we are going to have some kind of consolidations when it's jumped up like that. No different than a new week opening gap. It's just going to gyrate back and forth, back and forth, back and forth. Just as long as these gaps are staying unfilled, I'm still going to be more likely and convinced I'm on side to being bullish for being biased. So this is 10:02, and that would be the ending of me drawing out the opening range high. So I'm not going to mess with that anymore, and it's right there at the high of the new day opening gap. So it's really cool to see how this algorithm with price levels will actually just kind of come all together, almost like cogs in a machine, just kind of working together, which is really cool. So now I'm just flipping through ES and YM, Dow. I don't see how anyone trades the Dow. That thing is ugly. I don't want to go home with Dow. That is a no-go. So from me switching through the other markets, I am just saying to myself, hey, we're in consolidation. This really isn't giving me anything from the other markets that's telling me that we're going somewhere. So I'm just sitting back, still just watching price, see it reflect or show support on these busies. And it's always nice to use dollar, Dow, and ES to flip through, so you're able to get an insight on these correlated markets. So you're able to see if we're on side, if these are just completely mixed match, which causes lower probability. But definitely when these markets are in movement with together, it does help me have a higher chance and higher probability of me being biased for going long, say. If I were to watch ES completely crash, just drop, while NQ, the market I'm looking at, is still in a consolidation, I can then look at ES as a divergence and say maybe I'm offside with Nasdaq. Maybe my bias is not yet revealed itself to being bullish, to being poised to go higher. So it is a high resistance liquidity run right here. A lot of back and forth. It's expanding, consolidating, and we can get that from the new day opening gap. It just helps out so much to get that insight of knowing that this might be a place where price is going to be held. A lot of patience with these kind of days. Just making sure you're positioned right, making sure you have your mental faculties aligned with knowing that this is a high resistance liquidity run. You want to be understanding of looking at price. Is this where I'm seeing signatures that tell me I'm on side with being bullish? Are these gaps staying unfilled? And just kind of seeing these new day opening gaps act as stepping stones. Price goes under it. Price is above it, goes under, above, little by little. And this is power 3 lined out, which is really nice. I'm being able to see this a little bit more clear. Some days it's a little bit more difficult, but it's nice having that RTH gap being a discount and seeing how the opening of the day wicks down. And that's where your best entry is going to be found. If you're long, you're getting majority of that daily range. So I'm just flipping through on electronic trading hours, just seeing, hey, is this more places where relative equal highs are? And if there are, and I'll flip over to RTH and it's still approximately the same price levels, I like that. Right now we're getting more displacement. And at this moment, thinking to myself, okay, I'm on side. We are definitely pushing higher. Any kind of long position is going to be in profit. Distribution is still happening to the upside. I'm just flipping through, looking at dollar. Dollar looked like it was being bearish, which is nice. Oh, and anyone who trades the Dow, I don't see how y'all do it. Seems like a nightmare. Anytime I flip to that Dow, it's just consolidation, consolidation, consolidation. Here and there it moves, but I would never put my money in that market. It's crazy. Anytime I'm getting near these relative equal highs or these targets, I'm internally asking myself, if I was short, would I feel safe right now? Would my stop loss feel like it was going to protect me right now if I was shorting? No. I'd be squirming. I'd be thinking I was going to be taken out, and that's where I want to be in my position. I want to be able to say to myself, if I was trading retail, going short, I feel like I'd be stopped out, and that just lets me know that my long position is on the other end of retail traders. The draw to liquidity is right. A lot of back and forth today. Wasn't real clean, wasn't real quick to go somewhere. It was just a lot of push, pull back, push, pull back. And anytime you're in these kind of conditions, it takes patience. Don't want to jump out of your position. Of course, if this was giving me some kind of seek and destroy and this thing was jumping back down to the opening range low, stay out of it. No need to be trading on that day. It's just gonna hurt you. Right now I'm seeing price push down just a hair. I still have these new day opening gaps I can see as act as support, and also within that consolidation there is going to be a breaker in there, and the back and forth is just, I'm thinking that's balanced, all the back and forth in there. This is all on a 1 minute chart. I'm waiting for Thanksgiving to come around and Black Friday so I'm able to get that discount for premium for TradingView, which is nice. Mine just ran out last week, so I'd rather wait and save some money and buy it again. So I can't have multiple layouts of, say, 15 and 5 minute chart next to this 1 minute chart, but that's okay. It's just refining my edge on the 1 minute chart, and that's what I use mostly. I use a 5 and 15 minute just kind of the 5 minute helps me see if I'm really in a consolidation. If I can't see that on a 1 minute, 15 minute, of course, I'm using that to draw out places where targets are. It's really easy to see relative equal highs and lows and singular on the 15-minute chart. Flipping through, Dow just still looking like it's not going anywhere. Dollars making lower lows, I like that. Just continually giving myself feedback, looking at correlated markets to let me know if I'm on side. And there's just nothing interesting me with other markets. It's just kind of consolidating. I almost would rather see that than see Dow completely drop. I'd rather see it in a consolidation and ES kind of moving higher, making a higher high. I'd rather have that than some kind of big divergence between Nasdaq and Dow. We're so close to this new week opening gap low, and there's a new day opening gap low within that new week opening gap. Buy side liquidity is layered inside of it. This looks really good. Just kind of waiting, kind of internalizing myself within a long position, telling myself that it's just high resistance. We're gonna have give and take. It's gonna be a little choppy, but as long as I'm seeing expansion outside of that consolidation, I'm on side. As long as this thing doesn't just drop and it's some kind of reversal, then I'm okay. And at 10:24, we get a nice expansion to the upside, which is really nice. Right here, I was trying to look for the wand, the hit.